The recently tabled Budget 2025 is a record-breaking 420 billion budget filled with a mix of policies ranging from useful tax reliefs and incentives to help the rakyats to, dare I say, controversial dividend tax and petrol subsidy cuts. Here's my take on the key policies and how they will affect you and maybe even your business. The biggest talk of the town is none other than the new 2% dividend tax, which is imposed on annual dividend income exceeding 100,000 ringgit received by individual shareholders, which includes resident and also non-residents. You see, when companies make money, i.e. revenue, they have expenses like overhead costs and salaries to incur, right? So after minusing off all those costs, you get the net profit amount that is taxable at a corporate tax rate ranging from 17 to 24%. And then companies will distribute dividends, which is like a year-end bonus to all their shareholders. That extra dividend in excess of 100k is taxed now at 2%. If you are worried how this affects your dividend investments, don't worry, because as opposed to taxing retail shareholders that invest in dividend-paying stocks, which honestly doesn't make sense since there's a 100k threshold, this was clearly designed to catch businessmen avoiding tax, which usually pay themselves a very low amount of salary and just dump most of their life expenses into the company's deductible expenses that we have just mentioned earlier, and then they just get paid in dividends instead, which can enjoy a lower corporate tax rate as compared to the individual income tax rate, which can go up to 30%. My first impression of this, it's kind of confusing because this means there's a double taxation going on, which is very unfair to begin with. If you're watching this and you receive a salary, say 5,000 ringgit, your employer doesn't get taxed on your 5k salary because it's a deductible expenses for them, and that tax obligation would have been transferred to you, and you are the one paying the individual income tax on that 5k salary. I mean, yes, it's 2%, flat rate and still very low all things considered, but the main concern here is if this was pushed even further down the road, which I would take a bet and think is most likely the case, or if it's implemented on shareholding companies, which will impact companies with multiple layers in the form of double taxation again and again, then we have a problem. I'm sure many of those big bosses would have subsidiary companies structured around this to avoid that 2% tax. So I'm taking a guess. I think this loophole will definitely be closed in the upcoming revision. Next item I want to highlight, the mandatory EPF contribution for all non-citizen workers to be implemented in phases down the road. While there's not much details provided during the budget speech, on the surface, it seems like a good move to attract more foreign workers, but I'll just say this is bad in many ways. If you think about it, the 2.5 million foreign workers in Malaysia don't just cover those professional expats you occasionally see here and there. It also includes those hard labor working in factories and manufacturing. Can you imagine now if there's an additional, say, 12% EPF contribution cost added to the expenses of the manufacturing companies? That's a whole lot of cost inflation for the employers, and guess who will be the one paying for the inflation in the final goods and services? Get ready for it. It's you and I. But I guess there's two sides to each coin. On the flip side, this also means there will be a huge influx of additional contributions to EPF, which means more money for them to invest. Could be beneficial in terms of strengthening the Malaysian ringgit, or maybe even getting us a better dividend rate. But I guess only time will tell how this offsets the inflation pressure. And while we're at this topic of inflation, let's add salt to the wound. Minimum wage has been increased from 1.5k to 1.7k effective 1st of February 2025. This is another layer of cost pressure, especially on the manufacturing sector that employs a ton of cheap foreign labor, while not really affecting other industry because 1,700 ringgit is still pretty low all things considered. So while you and I won't see any immediate impact in our environment, it does feel the price inflation for the final goods and services. And PMX also mentioned that the government will slowly enforce the progressive wage policy, PWP, which is basically aimed at promoting wage increase above the mandated minimum wage set by the government. For example, Instead of just staying at 1,700 ringgit, they would encourage companies to pay more than that, and then the government will then subsidize them at a fixed rate. At least that's what they are doing right now for the current pilot program, which is still on a voluntary basis and not yet mandated for companies. Could be interesting to see how this develops. The next highlight of budget 2025 would be none other than the Petrol Subsidy Cut, especially for the top 15% of income earnings, i.e. the T15 income group. Well, yes, on a high level, I agree this will make sure the subsidy goes to the targeted groups that need it more than the T15 instead. But I have more to disagree. First of all, it's implementation. There's no exact classification of T15 group, and there is no real way to verify if the person is exactly T15 or not. Our transport minister was suggesting maybe we could use our MyCard or IC to verify ourselves at a petrol pump. In the past, some are even suggesting the segregation of income groups to be done based on monthly earnings. There's so many moving variables and loopholes in this, so in my opinion, this would be an implementation disaster. Unless there's a centralized database for everything like Padu, which is easier said than done to be implemented correctly. And in reality, the T15s would hardly care about their petrol cost inflation. It's too little to care about in the grand scheme of things. But if done incorrectly, dialing down petrol subsidies and also reducing the free money moving in the economy could result in higher costs for businesses. That could also trigger down to consumers like you and I. Quick pause, if you want to invest in the foreign and international markets, look no further. Interactive Brokers is the choice for you. Highly regulated in over 11 different countries, amazing low fee package for all things stocks, ETFs, funds, options, etc. etc. This is the best broker you will ever need and is the one that I've been using since the start of my investment journey. Feel free to use my link down below to open an account for yourself and start trading within 1 or 2 days, and trust me, you will not be disappointed. Okay, let's get back to the video. Now, let's talk about SST. There's two parts to this, the sales and then the service part. We'll start with the sales part first. Effective from 1st May 2025, sales tax will be increased on non-essential items such as imported premium goods, which by itself can be a very broad term that encompasses a lot of things. There's not much elaboration on this during the budget speech, but PMX did mention avocados and salmon. I mean, I don't even know if this was supposed to be a T20 food. Salmon is pretty much everywhere, especially sushi stores, from budget sushi stores to luxury Japanese restaurants. So I honestly don't know what to feel about it. Now, on the service tax part, it will also include commercial service transactions between businesses, which includes fee-based financial services. For example, consulting, legal, accountancy, project management, etc. etc. Might not be relevant for most of us, but it will mainly affect businesses, especially when there's investment activities like mergers and acquisitions. Certain industries that rely heavily on B2B services might also feel more hit from this tax, like retail and logistics. For example, a clothing store that now incurs more charges for manufacturing and transportation of their clothes. You can expect some of that cost inflation to be passed down to us as well. And since we are on the topic of tax, let's talk about the sugar tax, or to be more precise, the excise duty on sugar-sweetened beverages. Excise tax is basically the tax applied at the manufacturing level, but regardless, an increase of 40 cents per litre will inevitably be passed down to consumers like you and I. And to be frank do you think ordering Bali Kosong or Teo Kosong will get you a cheaper bill? You slowly wait So, welcome inflation again. Now, another subtopic on tax, this time a good news, because the tax exemption on foreign source income FSI received by resident individuals in Malaysia is further extended by another 10 years until 31st December 2036, and that income includes salary, dividends and investments. So, who will benefit from this? I would think of firstly, freelancers or expats in Malaysia who work for foreign employers and get paid in foreign currencies like US dollar from the US. They will benefit. The income they earn from outside Malaysia won't be taxed when they brought in into Malaysia. 2. Malaysian working overseas who send their earnings back home also will benefit. The money they send back to Malaysia will not face any additional tax. as long as it was already taxed in the country where they earn it. Number 3. Real estate investors who own properties abroad, such as in the UK, are now exempted also from paying Malaysian taxes on the rental income they receive from those foreign properties. And last but not least, foreign market investors who hold shares in companies or ETFs from outside Malaysia, like Apple stocks or US ETFs, will not have to pay Malaysian income tax on the dividends they receive. This is a great way to avoid double taxation on those foreign source dividends. Another good news, this time on the personal income front, there is a new tax relief on housing loan interest payment for first-time home buyers, provided your sales and purchase agreement (SPA) is executed from 1st January 2025 until 31st December 2027. So this will apply for those of you buying your first home for 3 consecutive years commencing from the first year your house loan interest is being paid. You can offset up to 7,000 ringgit for properties with a SPI price below 500k and up to 5,000 ringgit for properties priced between 500k to 750k ringgit. In my opinion, 750k is a pretty respectable amount and covers a lot of properties in Malaysia. Maybe except those above 1,000 square feet in KL. Anyways, if you bought a home with a joint buyer like myself and my wife, you can share the tax relief for the loan interest paid as well. So, overall, while there are really commendable efforts from the budget which will benefit the rakyats, I can't help but to feel that this budget is no other than tax the rich, help the poor. B40s, huge win for them as always. M40s, barely anything significant. T20s, punished. To be honest, not a surprise at all. Alright, that pretty much covers the main highlights of budget 2025, at least for what I would personally care more about. Let me know what you think of this budget. Were there any particular points that stood out to you or that it could be done better? Remember to hit the like and subscribe button down below. And until then, if you're interested to know where Malaysia is headed in terms of its economy, this video is definitely a good watch. See you over there.